Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're taking a look at the retail sector. So lots of stocks, they're reporting in the sector this week and over the next couple of weeks. So right now the bulls are pushing super hard. Charts are getting a little frothy. I'm going to go through it. I'm going to try to do it quick. First up is BOOT here. They're up here at 72 on RSI, 97 on Fasto. It's breaking out here. You can see this close on Monday above high close horizontal resistance. That did signal more upside potential. As long as that EMA 4 at 27 is holding, this uptrend is super strong. If you look here on the monthly chart for BOOT, this is the whole history of trading for the stock. We can see here that up here at 32, that's going to be the big level to break. It looks like it's working its way up to that level. If it gets up to 32 and stalls out, that could be where it takes a breather. Okay, let's look at AEO here. This is a huge move today. Just been on a giant run. This is insane. It's up here at 72 on RSI. If you look at the history of RSI, you can see it has a tendency to top out at this level. It's actually above previous levels where it's topped out. So this is another one of those charts that's looking very frothy. It's getting pushed very hard. What's going on is writing EMA 4 support higher. As long as that level at 2740 right now is holding, the signal is more upside potential. Once you see a close below, that's where it can consolidate and pull back. You can see this break here on the 6th of August. That close above high close horizontal resistance, that signaled more upside potential. Okay, this is important because a lot of stocks are setting up in this video to that will need to break this high close resistance level, and if they close above the way AEO did, this is what you want to see. You want to see continuation, a breakout to the upside. If you look here at the AEO weekly chart, you can see here this is on a blue sky breakout. This is all-time high levels. It's hitting new all-time highs. There's no trading above this level. Okay, so back here in 2007 was the prior high until that level broke a few months ago, and now it's just cruising higher. As long as that EMA 4 basically at $25 is holding, it signals just to keep riding. One thing that I'm noticing on these charts is a declining volume pattern. Notice how the volume is decreasing. It seems to me like the buyers are tiring as the share price is working its higher, which is a red flag. If you look at DG here, this is Dollar General. It closed up really nice today. Yeah, we had some, there were some really big call option percentage gains today for these tickers. Some did better than others, but some had as much as being up 600-700% on the day. So congrats to everybody that was trading the retail sector today. As you can see here, this is pushing really hard. It broke out to the to new levels today. Breaking out above that 103 resistance zone does signal more upside potential. You want to see it stay above that level. If it did pull back, you want to see it hold the EMA 4 here at 103 and stay above that high close from last week. If you look here at the Dollar General monthly chart, you can see here it's breaking out. It's hitting that all-time high level. It looks like it broke just above that level today. It looks like it either hit or broke slightly above the all-time high level, which was formed here on January the 18th or January 2018, that high of the month. You can see trading started on 2009. This stock has been a beast. What you want to see now is it just stay above that 103 level. If it dropped below 103 and then pulled below 100, that's where it could possibly take a little breather and consolidate. Take a look at ROST. This is Ross Stores. Closed up 2% today. Another big options winner. Breaking out to new highs here. The close above this high close from last week does signal more upside potential. Stocks just have to keep making those high closes. Once they stop, that's when they consolidate. You can see EMA 8, the lime line, held on the last pullback, so you want to see it stay above 91. If it gets below 91, it could take a breather and pull back. If you look at the ROST monthly chart, you could see here this has just been just a beast. I mean, look at this thing. If you loaded back here in 99, that's just one incredible gain. Right now, it's hitting all-time highs. Okay, and that's an ongoing theme with stocks in this video. Many of them are hitting new all-time highs. They're on blue sky breakouts. A blue sky breakout means there's no trading at these levels. You just have to look at the intraday charts to find resistance levels because there's no history of it trading this high. A lot of people are concentrated on the FANG stocks and then making new all-time highs, but the retail sector has plenty of companies that are doing the same. When they hit these lofty levels, you have to be on the lookout for for them taking a breather. Take a look at TJX here. You could see yesterday it did take a breather. It pulled back, and then today it had a sharp bounce off of EMA 8 at 99.50. When you see that EMA 8 level break, that's when it could consolidate. The last time it had consolidation in July, it came all the way down to the middle Bollinger Band. That would put it down at 98. Okay, so it's trying to bust out higher and break out to new highs now. If you look here at the monthly chart, you can see here it's breaking out into all-time new high levels. It's at this blue sky breakout right now. You've got multiple white candles in a row. Once again, this has just been an incredible winner. If you loaded down in 99 and 2000, I mean, if this was a long-term investment, you've just been heavily rewarded. For all of these discount retailers, they've just been beautiful stocks to own over the long term. If this does close below EMA 4 at 95.82, that would signal consolidation. Take a look at Kohl's. So Kohl's is breaking out on the daily chart above the closing price on the 12th. That close above is signaling more upside potential. Now the big level to break is going to be $80. Okay, so it's going to need to get above 80 to head higher. If it stalls out at 80, this could be the temporary top following this multi-day run. You can see down here, it looks like it's up, what is this, 9 days in a row. So nothing goes straight up. You have to be on the lookout for this taking a breather. You've got, Fasto up here at 96. RSI is at 69, and the last time it had this super strong push, it did push well up into near 80 on RSI. So it could push higher. It's just, it's getting very frothy. All right. So if it does pull back and take a breather, you want to see EMA 4 at 76.80 hold. If you look at the monthly chart for KSS, you could see here it's also trying to make a blue sky breakout. The only overhead resistance is the top of this wick from 2 months ago, and so it's going to need to break above that level. It's basically the $80 level. If it can get above that 80 and turn it into support, that's where you could see it breaking out. Take a look at the volume bars down here. Look at this declining volume bar. That has me concerned that this is going to top out. I mean, look how the buyers are tiring as it's heading higher. They're pushing it higher, but it's not like the volume is increasing. So it looks like the buyers are tiring on the way up, and so that does set it up for a potential pullback at some point. So keep an eye on 73.45. If it did drop below that level, that's where it could really get consolidating. That happened back here in 2015. Right now the charts are super strong, but when everybody is not saying everybody's drunk with greed, but it has that type of vibe when everything is just pushing so hard, breaking out to new levels. So you have to be, prepared for a potential cool down. Take a look at Macy's here, closed at 4%. Once again, look at RSI at 66.97. That is the level where it topped out recently. But if you look back here on that run in June, it was able to get well above. It got, it pushed 80 on RSI. So this could break out higher. You just want to see what you're looking for if you're a bull is you're looking for this type of move. So you can see here where Macy's has this top where it has this cup and handle type of pattern. And it's trying to break out above the top of the lid here. Well, if you look at AEO here, you can see it really broke out when it got above. This is similar to a cup and a handle, and then when it got above this high close, that signal that wanted to head higher. Well, that's what Macy's it did today. It closed above the high close resistance level, which is the closing price here on this white candle. And so that does signal with this volume spike that it wants to break out higher. You want to see it push the way AEO did. AEO reported earnings, I believe it was on the 7th, so they reported early, and they have been able to continue running afterwards. And so that's what you're looking for. We will keep our eye out for a change in trend. If you look at Macy's, it's not at an all-time high. It has room to run. I mean, here we go again with this declining volume pattern. That declining volume is just, it's a red flag to me. It is walking its way higher, but why is the volume decreasing at such a dramatic rate? It just seems like, the algorithms are set to keep buying, but people aren't really buying heavy. If you look here at the 50-month moving average at 37.69, that's going to be the big level to hold. Okay, so if it were to drop below that level, that would signal downside risk. If it stays above that level, that signals upside potential. It's currently trading above all the moving averages on the monthly chart, and it's riding EMA 4 at 38 support higher. As long as 38's holding, it just signals it wants to keep pushing. I mean, with other stocks in the sector breaking out with blue sky breakouts and all new time highs, this still has close to a 20% move, or it does have a 20% move more back to get to its all-time high, which is around $64. Maybe it was higher. I have to go possibly back further, but I believe that would be the all-time high here. Take a look at Target. So Target is up here breaking out as well, 1.5%. As you can see, it tends to top out when it gets at these levels on RSI. It did push above 70 back there in May. Right now, hitting the 68 level, you can see, look at multiple times on RSI. This is where it topped out. You have 95 on Fasto. There's not a lot of juice in the tank here. Look at all the peaks that were at this level. Okay, so you have to be prepared for a cool down. Puts are going to return some nice percentage gains if they do get a pullback, if they let the bears attack and these things get a dip. Puts should do really well after these big runs. Just right now though, calls are in play, and the trend is your friend, so you have to keep on just going with the flow until you get a chance to attack. If you look here, the breakout today above high close resistance signals it wants to keep pushing higher. As long as it keeps making new high closes, the chart's intact. What you don't want to see is EMA 8 break. Okay, that's at 81.55. You can see that level held yesterday. If it dropped below, that's when you can see that middle Bollinger Band tested the way it did back here and back here. Okay, it dropped down to that $80 level. Okay, if you look at Target on the monthly chart, this is actually, hitting the all-time highs as well. Okay, so this has been a huge winner, big breakout higher. The last couple months, the last 3 months, it's been breaking out above high close resistance from 2016. It just needs to keep holding EMA 4 at 78.44. As long as that level's holding, the longer-term signal is just to keep riding. As you can see, besides this little dip below right here on this red candle, there hasn't been a close below EMA 4 since this red candle way back here in 2017. So the trend is your friend. Keep riding it. If it pulls back, it has to stay above this 2016 high close. If it were to drop below, that would be a red flag. Okay, let's look at WMT here. This is Walmart, another stock that's been pushing. They're getting ready to report earnings here. It broke above the 200-day simple moving average on Friday. Now it's back above that level today. That's the red line here. It needs to stay above 90. It's hitting resistance from over here in February. Okay, you can see this bounce. Okay, it's going to have to get through this 91 resistance zone. Bears are trying to attack. Are announcing they're launching an attack from this level here. So keep an eye on it. If it fails to break 91, this could pull back. If it drops below 90, that's going to be a major red flag. It has to stay above that 200-day simple moving average. So right now it's at a flex point. It's between 90 support and 91 resistance. A drop below 90 is going to signal downside risk with the 88.50 middle Bollinger Band on deck. A break above 91 and it could get moving. There is this gap up here. There's an unfilled gap above between basically 96 and up here at 100. So you could get, if earnings go well, you could get a run up to the bottom of this gap. Okay, so yeah, people are on both sides of that trade. Some people are saying it's going to go up, some people are saying it's going to go down. Just have to follow the charts. Let's look at Jcpenney here. Closed up 7%. So this isn't one of the better stocks. As you can see, this is really beaten up. It's a worst of breed. I just showed you the top dogs. The really good companies in the sector. And as you can see here, we've got Jcpenney, who when's the last time you've been to a Jcpenney? It's trying to break out. You can see you have the descending resistance line here, and so you got descending resistance, and today there was a close above the red line. That's signaling more upside potential. It also closed above that 50-day simple moving average at 252. So as long as it stays above both levels, that's going to signal more upside potential. You just want to see it stay above 250 and hold that level. Back here in June, it got above the green line, the 50-day simple moving average, and it pulled back, turned into resistance, and it continued consolidating. In July, it couldn't even close above the 50-day simple moving average. So today, this is a bullish change in trend. You have a PSAR bull flip. What needs to happen now is it's got to get above this 100-day simple moving average at 270. If it can break above that, then you have the $3 level up there at the 200-day simple moving average, which is lined up with this high close resistance zone around 305. So yeah, so keep an eye on JCPenney. This made a really strong move into the close. If you look at this 15-minute chart, you can see here when it dropped down and it hit the 50 simple moving average, they loaded. And look at the volume coming into the close. I mean, this thing pushed really hard. Look at that, 3.5 million shares pushing into the close. They do announce earnings here. What is it? Tomorrow or the yeah, it's coming up. Yeah, and so yeah, this is going to have to keep riding EMA 4 support higher. If you see it drop below that 260 level, it could consolidate. You really want to see it stay above 255 as well. That was the high close today. You want to see on any kind of dip that level turn into support. So really sweet move for JCPenney. Take a look at Nordstrom here. Ticker symbol JWN, closed up nearly 4% today. Yeah, I should have had this in the beginning, earlier in the better. This is one of the better companies as well, and yeah, it broke out today. So as you can see here, there was high close horizontal resistance at $54. That breakout above is signaling more upside potential. Like I said before, if you're a bull, you're looking for this AEO type of move on the 6th. High close resistance. It closed above. It could have either pulled back and topped out or broke out higher and went for the breakout higher. So if you're a bull, now you're looking for a breakout higher. How will you know if it's not happening? If it drops below 54. A drop below 54 is going to be a major red flag for the stock. It needs to stay above. I mean, look at all the green volume bars in a row. This is on a multi-day run. It's looking really frothy, but you do have RSI at 64, which this does not like to get too high on RSI. You always look at the history of the stock, and history tends to repeat. So looking at RSI really even gets up to this level, and it's topped out at this at the current level, and it barely, it gets above 70. Obviously, you'd have to go off this chart. That yeah, it could find resistance here soon, especially with Fasto here at 98. Look at Fasto. Each one of these peaks are at this level. So yeah, I mean, there's a good chance that this takes a breather because there's just no juice in the tank. On a dip, though, and you never know, they could keep pushing it higher. It's just really, really, really frothy. You want to see that 54 level hold. If you look here at the month, or I'm using the weekly chart. So this is the weekly chart because this is not at all-time highs, and it's trying to break out higher. I'm seeing to the upside 56 is the next level, 56 and 58. You've got this closing price from back here in November 2016, and then the December 2016 close at 58. Those are the two big levels. If it comes up here and hits 56 and stalls out, which it very likely could do, that's where it could take a breather. If it busts through, look for a run up to 58. As long as EMA 4 at 53 is holding, it's strong. If it drops below 54, though, it could get more into this consolidation pattern. Now that it broke above 54, you want to see it close above for the week. I mean, keep in mind, this is a weekly chart, and this week's candle will not set until the closing bell on Friday. So a lot can change between now and then. Okay, and once again, look at the volume. The volume has me concerned because it's, I mean, it is pretty light. I mean, look at that volume. It's not like, I know the week just started, like I said, and volume could pick up, but it's not like this is breaking out with the big 4% move on a nice fat volume spike. It's pretty light volume. And so, yeah, that's always something to be concerned about when stocks are breaking out to new levels. You would like to see larger volume behind the move. Okay, take a look at SHLD here. Now, this is the bottom of the barrel. This is worst of breed. Keep an eye on it. It's total piece of junk. It might get moving because the rest of the sector is moving. It came down here and it's trying to form a double bottom, at least trying to hold support and potentially bounce down here. And so what you're looking for is a bounce off of this 180 support zone, and then and then it needs to get back above the middle Bollinger Band at 196. It got above that level or closed right at that level in July, but it failed to hold and pulled back. I mean, the last solid close above it was way back here in May. And the bottom line, this has just had a really hard time getting an uptrend going. If it does get above 196 and then break above this top of this channel around up here around 210, just below, that's where it could get moving, possibly run up to that 50-day simple moving average. Now, if it were to drop below $1.75, below the bottom of this channel type of move, below $1.70, I mean, that's going to signal major downside risk. It's not in play right now. It won't be in play until it breaks above EMA 4 at 185, and then if it does, that's just a short cover rally unless it breaks the middle Bollinger Band and turns it into support. Okay, retail sector is in play. Congrats to everybody making that paper. Be careful out there. When everything, or what is it? Just when life looks like easy street, there's danger at your door. Everything is going really good, but nothing's, the good times don't last forever. So you have to be prepared for a potential cool down with these super frothy blue sky breakout charts. Just keep riding that trend until it cools down. Follow those charts. Keep in mind the intraday charts, the 15-minute chart, this is going to signal the breakdown first. And once you see, if you're really trying to ride it out and you're a strong bull, if you see the candles go below the middle Bollinger Band and then below the 50 simple moving average on the 15-minute chart, that's your clear signal that the chart's breaking down, and that's when it could potentially consolidate. If you want to try to ride it out, sometimes it's best just to wait to see if that breaks. Okay, thanks a lot for viewing this video.